I'm going to start this off by saying I love all investing. Caveat. But I've got a real issue with dividend investing. I see guys on Twitter, dividend this, dividend that, look at my dividend stocks, blah, blah, blah. There is nothing magical. I'm going to say there's nothing magical about dividend stocks. Now, I've got to make clear one point that many people don't want to believe. If you have a $50 stock and it's paying $1 dividend, on the day it pays the dividend, you do not have a $50 stock. You have a $49 stock because it's paid out $1 in dividend. Dividend investors don't seem to know this underlying, basic, simple thing, and it drives me mad. They think that a dividend is free money and that it doesn't impact the share price. It actually makes me angry when I see all these dividend guys talking as if this cash payment out of nowhere is somehow free money. How now they have $51. No, you do not. Your stock price and the $1 dividend, for simplicity, you had a $50 stock price, bringing the whole company under $50. All things together, that company's paid away cash. It can no longer be a $50 stock. All else equal, that stock price will immediately reflect and perfectly the $1 dividend it has paid away. It will now be trading at a $40 stock, $49 stock, all else equal. Do not get that wrong. Anyway, so that's the first mistake they make. Dividend stocks, yes, they have free cash flow and they're paying some of it out. Great, I love it. Investing, brilliant. Cash payments, share price going down by the amount that the dividend is, no problem. It's not a tax efficient way for companies to treat their money. We know this because when you receive $1, most people have to pay away amount of tax. So for me, for example, it's a 15%. For some, depending on your territories, it's 30% of that dollar. If you have it in a IRA in the States, in a tax-free wrapper, you can get the full $1. But there's nothing magical about dividend stocks. And I'm just going to show you to prove to you that just because it pays out some cash, it is not free money. And that's my biggest bugbear with people that bang on and on about dividend stocks. They somehow seem to think that it's free money. And in actual fact, in most circumstances, almost in every circumstance, they are underperforming the S&P 500, the basic index. Let's have a look. So this is a really handy site. It's called totalrealreturns.com. Now, it has dividends reinvested. So the price you'll see is the exact cash payment going back into the stock. So there's no magic, okay? And that's total returns, yes. Now, pick your favorite dividend stock. A lot of people like, it's a realty income. Name your stock, but let's just say people bang on about, dividend investors obsess about stocks that continually raise their dividend. So on a year-on-year basis, they increase the dividend, so the dividend's getting bigger and bigger, and they bang on about these stocks. So the NOBL ETF is, they've grabbed all of these dividend aristocrats, put them into an ETF. Now, surely these are the best dividend stocks money can buy. So now let's just have a look. How does that compare to just the S&P 500? Just the poor old S&P 500, because your dividend stocks are so much greater than any other stock alive. That's what these guys would have you believe. Here we are. The red line is the S&P, the blue is realty, and the green is the dividend aristocrats. Okay, so the realty income outperformed for a little bit here, outperformed again, and then has now consistently underperformed, including dividends. The NOBL, the Dividend Aristocrats, the green line, pretty much tracked the S&P and now has more recently been underperforming, and now very much so in this last. This is from 2021 onwards. Is quite a significant difference between the Dividend Aristocrats, yes, all your favorite dividend stocks, and the market. And you can throw in here whatever you like. I know a lot of dividend people like SCHD. They swear by it on their holy mother's grave. If they only were to own one stock, it would be SCHD. Well, let's include it. This is as simple and as straightforward a comparison as you like. So this is the orange line. Guess what? Tracked, underperforms. I don't know how else to help you. Dividend stocks, if you're being sold the dividend stock route, I'm not going to say it's a lie because you're investing, I understand, but it ain't all that. And the beauty is, like, if you put it into an AI engine now and you say, why should I invest in dividend stocks? It says things like, oh, that it's less risky. Well, I'm pretty sure these drawdowns are the same. I'm pretty sure these massive down moves are the same. I don't see how this is less risky. You're just underperforming. So please help me. What am I missing? How can you make the case for dividend stocks? Let's try QQQs. I've got a feeling it outperforms the S&P. Holy macaroni. It makes the S&P look like a fool. The QQQs, which is the tech index, is a million miles away. It's outperforming by a million miles. Oh, but my dividend stocks, they really do good. They really pay out that money. They right on the, what a good investment. Well, give me QQQ every time, and that's the is the NDX. It's the Nasdaq 100. So I just get frustrated. My main point is I get frustrated when I see people flogging this horse of dividend stocks, that somehow these cash payments mean anything about performance, because they do not. Anyway, this is a really handy tool, totalrealreturns.com, and you can compare all this. And if you know anyone that bangs on about dividend stocks, just whack out the SPY or the Qs, put it against their favorite 5 dividend stocks, and you'll just see them cry into their tea, because they could literally just own the index and do a lot better. That's it.